Well, it's that time of the year, summer driving season kicking off this weekend. If you are one of the 34 million Americans hitting the road this Memorial Day weekend, be prepared to pay up at the pump. The latest numbers from AAA shows that gasoline prices are on the rise. Today, the price of gasoline for a regular gallon is $2.37 compared to $2.29 a year ago. Joining us right now, Mizuho Securities Energy Future Strategist, Bob Yawger. Bob, good to see you. Thanks so much for joining us.
Thank you.
Your take on gasoline prices. What are you expecting this weekend and beyond?
Well, we are a little bit behind where we were last year as far as the relative price of gasoline to crude oil. There's a lot of gasoline in storage, so we have a healthy supply situation moving in. But we have crude oil prices at $50, so it's supporting to a certain degree. Demand this year is about 175,000 barrels a day below last year for gasoline, and so it's a pretty healthy situation going in.
We're coming into OPEC. They're in Vienna as we speak. What do you think is going to be if they do agree to extend the cut, what do you think the compliance is going to look like? This time the compliance was only so-so, and so the Saudis had to cut a little bit more than their fair share. What does that look like if this goes forward? Are they going to play ball in Iraq and some of these other states or not? Well,
the Iraqis are the most likely ones to cheat on compliance. They can ramp production pretty quickly. They'd like to. They will probably make a commitment to the agreement. Whether they stick to it, in fact, is a different issue. I kind of doubt that they will. The problem with this deal as opposed to the last deal, I'm assuming this deal is rolled, and I'm assuming it's for 9 months. The problem with this deal is, as far as compliance is concerned, this deal is during the Northern Hemisphere driving season. Demand is elevated at this time of year. Everybody wants to move barrels. Nobody wants the United States to steal their market share. We are in the business these days of stealing people's market share. We steal market share from the Saudis and China these days. That's an unheard of concept just a couple years ago.
When you say steal market share, everybody wants market share. I don't know that it's stealing market share.
But we're taking those barrels that they used to move into China in particular, and they do not want to see that happen. That is that will calculate into the agreement tomorrow. So I do believe it's more likely that they will cheat on this deal because you want to move barrels into where the demand is greatest, and this is the time of the year when demand is greatest.
Yeah.
Our production in the United States and future production that comes online from these technologically advanced oil and gas companies, is that going to keep a lid on prices for the long haul?
Yes, I believe it does. We are at 9.3 million barrels a day. The record from 2015 was 9.6. Prices cratered and rallied back since then. As we approach $60, we will probably approach 10 million barrels a day here in the United States.
Wow.
It's a big number, and it's that, to a certain degree, between the United States production increases in production in Libya and Nigeria, it covers the cut that OPEC has already made. So OPEC also has to take that calculation into mind, too.
And helped by the rollback in oil and gas regulations by the Trump administration, which has been one thing that the administration has been able to do without legislation and without having to involve Congress.
You're right.
Yes.
Why isn't the objective as low an oil price as possible while still maintaining a level enough for investment to keep going? I mean, if you look at the frackers in West Texas, they can make money on oil that's pretty cheap.
He'll make more money if it's pretty expensive, though, on the other hand. But, yes, there's no doubt that's true. You want to feather it. There's an area where I would put the number at, call it 47, bid at 52, where everybody's kind of happy. Everybody's doing pretty good. You have to keep in mind the interest of the refiners in the United States, too. They feast on lower oil prices, too, so there's that side of the business also.
And the summer drivers,
yes,
and the soccer moms driving home, it makes a difference whether they
makes a big difference.
$2 or $3 extra.
We want to get to two big stories. Obviously, the Saudi Aramco IPO is on the horizon. You would think Saudis want to see oil prices high going into this IPO. It's obviously correlated with oil prices. What is your take on the Saudi Aramco IPO? And then I got to ask you about Trump proposing selling off of half of the U.S. strategic oil reserve. The president has proposed that on the Aramco deal. What do you think?
Well, you could easily make the argument that this OPEC agreement, putting it out 9 months, trying to bid prices up towards $60, is, in the Saudis' mind, part of the IPO strategy. The higher the price of oil when the IPO eventually does happen, probably sometime in 2018, the better the deal will do. And the better it does, we're talking billions and billions of dollars here. It's just not a rounding situation. So if you have a price of $60 or higher, that's going to go relatively a lot better than it would otherwise. So it's definitely in their interest to extend the deal. They may actually even be forced to cut barrels on their own that nobody else would cut. So they would be willing to give away market share to a certain degree to succeed in the IPO. That's a balance that they have to keep in mind.
And when is that deal hitting?
It's debatable. There's no set date yet, but probably 2018. It probably will not happen this year.
So that's when you want to look at where oil prices are, because you know they're going to be playing with this market.
They're definitely, this is not going to be an accident. You're absolutely right. I do say, I've heard from people who are involved in the deal that the Saudis are not very happy with the preliminary valuation of the company. They have very lofty goals. It has a lot to do with national promise and all that. So I think they're going to be very, very focused on where this goes. And I think you agree with. They'll cut more than their share if they have to get that price.
All the financial services guys were in Saudi last week, but obviously for the president's trip, but also they want a piece of that action for sure. Let me ask you, the president has proposed, and Dagan, I want to get your take too, because the White House's plan to trim the national debt is partly selling off half of the U.S. strategic oil reserve. Thoughts on that?
Well, it's not one of the bigger deals in the market, in my opinion, right now. It's good for 94,000 barrels of crude oil a day for 10 years. The duration is long, but the amount is not all that much. We have way too much oil in this SPR right now. We don't need that many barrels there because we are increasing our domestic production and kicking back on our imports. A country like China, on the other hand, they are increasing their SPR because they are the opposite. They are decreasing domestic production and increasing imports. So we really don't need 688 million barrels of crude oil sitting in a salt cavern down in the Gulf Coast.
This was part of the budget. Is this an effective way to raise revenue? What do you think?
It's on the margin. It's not going to raise. It's not a constant source of revenue. It's a toss away. But please don't sell low, because you know the government always sells that up. You know they'll start selling oil out of the SPR when crude's at like $35 a barrel.
Yeah,
they always mess that one up.
I do think it is time that we start to think about ourselves a little differently, because we are a major player in the oil business now. If we're going to get to 9-10 million barrels a day, we stand with this. We really are toe-to-toe with the giants. I do have to say that this is a $1.6 billion a year kind of revenue recognition, so it's not going to be a huge piece of the pie.
I must say, I think the key thing is the price to American consumers. If OPEC has to take some hits in order for that to take place, then bravo.
All right, we will leave it there. Bob, thanks so much for your insights. Great conversation. Bob Yawger there.